Hi, welcome back to the show. This is Joe Rabil with Rabil Stock Research. So most of you know that I have been providing research and consulting to institutional money managers for over 30 years now. And one of the things that I think where I can really add value for them is I can go through a big list of stocks, and usually they're stocks of interest, and narrow their focus based on two specific patterns in ADX. So let's go ahead and get into this agenda. So when I talk about institutional money managers, most of them are not trading oriented. At least the big mutual fund guys that I work with, they're looking for bigger trends. And so from the get-go, starting 20, 30 years ago, I'm always trying to identify things that I think, stocks that have big potential. And I want to show you how I use ADX to do that. There's a couple of combos using a monthly and a weekly pattern in ADX. And you can screen for these, and it'll be pretty simple. You'll understand after I go through the examples. One thing I want to make sure you understand, you might not put it in the screen, but when you go through the individual stocks, you do want to look at price in conjunction with the ADX. So I don't just look at the ADX and not worry about the price pattern. I'm looking for a price pattern and then supporting that thesis with the ADX. It's just sometimes I'll screen on ADX because it's so easy to do. And then the one thing I want to get across when we look at these patterns is to make sure you understand that if we're finding stocks with big potential, you can't use really tight stops. You got to give these a little bit of room. So let's go ahead and get into the examples here, and I think this will make a lot more sense to you. Okay, the first stock I've got is Genworth, and I've got the monthly chart on the left and a weekly chart on the right. Now, the first pattern I'm trying to identify, and remember, I'm starting with price, so I want to make sure I have some form of a pattern in place. In this case, I would actually look at this as an ascending triangle, basically. You have a flat top where you keep banging your head on this 5 level, and you have somewhat of an ascending trend line underneath. And what I'm trying to identify is a low ADX condition where the ADX stays below 25 for an extended period of time while we're creating this price pattern. So that's on the higher time frame. That's the monthly. So pattern number 1 on the monthly is low ADX. Okay, we're looking for a low ADX condition that's been in place for a while price forms a pattern. Now sometimes the pattern can be a triangle formation like that. It's possible every now and again you'll have something like this that could break out to the upside. But most of the time I'm looking for either an ascending triangle or just a flat out rectangular pattern. All right. Now, that's the higher time frame. Now, in this situation, the lower time frame is the same thing. We have a low ADX condition here and a low ADX condition here. But notice what we've got. We've got this long sideways line that formed on the bigger picture pattern, but look at what took place in this portion of the monthly. If we switch it to the weekly, you can see that we've created another rectangle inside of this bigger one. So we've got this bigger one here, and now we've created another one here. So what I've got is a low ADX condition here on the weekly and a low ADX condition on the monthly. What this is doing is telling me that we've stored a significant amount of energy for some kind of a move once this can get going and get through this sideways line. So the moment this breaks out like this, I think it's the type of thing, you might let it go ahead and break out and form some kind of a higher low or something like that, depending on the market environment. But generally speaking, when you have a good, solid, low ADX condition in 2 different time frames, you can buy the breakout pattern. All right, so that's pattern number 1. The second one is actually a strong ADX condition where we make a move to the upside on the monthly and then we pull back towards the 18-month, and usually in the area of the 18 and the 40. The 18 will not, it's bendable, right? We can get back below that line a little bit, but as long as it stays rising, it's still in force. So while that's taking place, if you notice, we had a really strong reading in ADX that actually exceeded 50. And then during this steep correction, I mean, the stock went from over 350 down to under 250 over the course of 6 months or something like that. And yet the ADX never dropped below 25. Green stayed above red throughout. This tells us we're in a power trend on the monthly chart. I mean, we've got a powerful trend in place. Now, when we go through this kind of correction, you actually create a downtrend or a serious reversal on the weekly chart. So we need to see a reversal back to the upside. In this instance, we get our 1, 2, 3. And now if you notice, we're getting a pullback with a strong ADX condition. So now we have strong ADX and strong ADX. You see the difference? So if you want to be a little aggressive, because green DI was above red here and above the 25 level, you could have played coming up through this 300 level, which I had mentioned in my videos to my subscribers, just because that level was so important, and on a relative basis, this was holding up really well. But this gives you another opportunity to buy a pullback where we have two instances of strong ADX, monthly and weekly. Let's go to the third example. This is where we have a low ADX condition for an extended period of time. Now, it's a little harder to see the rectangular pattern or the what I would consider to be some form of a pattern, just because we had this kind of big move to the upside here. But what I'll say is that if you look at what's developing, we are going from, we've formed somewhat of a saucer pattern. And the dynamics of this last move to the upside is really powerful. And you can actually see the ADX is starting to move up for the first time. Green DI is breaking out for the first time since way back here. I mean, we're talking 7, 8 years. It's the first time green DI on the monthly chart has been above 25. So we have that, but then look at what happens on the lower time frame. We didn't really have a low ADX condition so we could buy a breakout like we did in GNW. You did have low ADX, but you didn't have a good pattern. There wasn't really a trend line we could draw to say, hey, let's buy this breakout. So what you do is you let this break out, and then we look for the first pullback, and that'll let this alleviate this short-term overbought condition we've got. So some kind of pullback towards 80 or a pause, maybe. It might not pull back that far, but it might pause a little bit and let the moving average come a little closer. And we're dealing with a strong ADX condition on this time frame. So now we've got low ADX here and strong ADX on this time frame. So if you notice, we've got different combinations. We could have low ADX across the board in both time frames. We could have strong ADX in both time frames. We could have low ADX on the monthly and strong ADX on the weekly. And now let's look at the fourth combination, which is strong ADX on the monthly chart, and we get our pullback. And during the pullback, it creates the same kind of correction or opposing trend pattern on this time frame, but notice how we get a low ADX condition to form. So we can look at this breakout pattern coming up through this level as an operative buy signal. So we've got strong ADX on this time frame and low ADX on this time frame. Now, recognize something here. Look at this move to the upside. You see this strength? This is based on the buyers. Green DI is on top. We get a strong move and a pullback to a rising 18. That was the first pullback. And notice we had low ADX condition there. So this is another one where you could buy the breakout of this condition. Another way you could do this is you can draw like a steep downtrend line if you want to play it that way and play the first higher low here at $10. But there's a lot of different ways to enter. I talk about that in my course actually, but just recognize on the ADX pattern, we've got strong ADX 2 different times and low ADX 2 different times. This is the pattern that I think that I'd want you to start with, right? We want to look for stocks that show strength on their monthly. Now the monthly can show, let's just say this is the 25 line, can show strength and then it can drift back down below 25. As long as it had strength on the up move, it's okay if it drifts down a little bit below 25. And then on the lower time frame, you're going to want to look for a low ADX pattern, and then look for the reversal and the trigger patterns that I talk about in a lot of the different videos that I've done in terms of these two time frame setups. So those are the 4 that I'd be on the lookout for. Hopefully this helps, and I think if you start screening for this, you're going to find there's a lot of patterns setting up this way. All right, let's go ahead and get into the analysis now. Just briefly, my services can be found at rabilstockresearch.com. You can also find information about the course, the Trend and Momentum Trading course that I just put out a month or 2 ago on that same services page. So if you have an interest, go ahead and take a look. Let's go ahead and get into the individual stocks now. So before I get into the requests, I am going to go through the S&P. I want to touch on the Dow and look at a few of the sector ETFs as well. So let's just look at this S&P, and I actually have a hourly chart in the bottom left instead of the monthly because I want to point something out here. So we rallied up to this 4,000 mark on the S&P. Green DI was showing a little bit of improvement, but it hadn't broken out above the red DI. So we have this move to the upside that has turned the 18 positive, but we didn't have any momentum confirmation yet. Now, we had pretty good momentum on the hourly chart. If you look in the bottom left, we had pretty good momentum here. And then on this move up, it started to die out as ADX did not confirm by getting back above 25. So I look at that as a negative, as a short-term negative, but not necessarily a point. I guess it depends on the type of trader you want it to be. If you want to look at this as a really short-term sell signal, you would have probably entered off a 10-minute chart, and then your target would be, or you'd have probably taken it at the end of the day after such a big move, or you'd be looking for a target to the 18 on the daily. Now, what I think is going to happen here, at least this is the way I would be looking at this as my assumption, is that we've got this 39 level, which is very close to the 18-day. We'll get some kind of a rally off the 18-day and see if there's any kind of an attempt to rally here. While that's happening, we watch the momentum on the rally. If Green DI can't do anything to the upside and it's pretty weak, then you have to start to get really worried on a rebreak here, because that'll be breaking the 18-day and we'll have completed a 1, 2, 3 reversal. Remember, we've done the 1. We don't have a 2 yet on the hourly. So if we get some kind of a retracement back to the 18, aggressive trade would be looking for a reversal here on the hourly, or you could wait for this to break the 18. So that's kind of how I'd be watching right now. And the reason why is that we're at such a key level here for the market. I've been talking about this to my subscribers for a while. Between 4,000 and 4,200 is incredibly important. If we can't punch through that, then we have to really be on the lookout. Now, my alert goes up dramatically on a break of 3,800. If we break 3,800, I'm very worried about this market and what to expect from here. If we stay above 3,800 and below 4,100 or something like that, then we're just going to be bouncing around. What I'm actually looking for is a really quality signal, either getting extreme overbought and people bullish, or extreme oversold and people getting bearish. I mean, if I can get one of those two signals, that's something that I could feel like I can sink my teeth into. We haven't had that since here. This one was okay, but not really great. This was a great signal. This was a good signal. This was not so much all that exciting, and neither was this. So we haven't really had an extreme buy or sell with sentiment in agreement. But the price action off this high is a huge warning flare. We have to be watching this pretty close. Now, the reason why I want to talk about the Dow Jones real quick is look at this is a totally different pattern. Where the S&P is making a lower high, we're seeing the Dow come down and make a higher high here. And then we pulled back and we made a kind of a pause. And I've been saying, again, this is kind of the level here. On this diamonds, it's around 320. Here it's 3,500, something like that. If we can hold this level and these two moving averages, then we're in pretty good shape. But I don't like the start of this pullback. Do you see how this has shown these big red bars? And what I don't like are these big red bars where it's massive body and little wick. You see how there's hardly any wick to this at all? It's just open, little rally, and then selling all day long, and then we close near the low. So that's kind of everyone in agreement to be a seller. Now, we've got a little gap down here. We have some prior support. It makes sense that we get some kind of a rally. But what I'm telling you is if we come back down through this prior low and through the 18 and the 40 week, then the positives that were taking place to the upside are kind of being erased in the short term. And again, we can see the violence of the selling. One of the things I didn't point out in the S&P is notice this red DI really making a move on this decline. That's telling us that the sellers are pretty serious right now. And it also means we don't want to go diving in on the first pullback here. This is not a pullback to be a buyer. This is not a buyable pullback, in my opinion, right now. We're going to have to wait and see if this can survive. Let's look at XLF real quick. Same thing. You see how we had a pretty good move to the upside to test the high, but look at how violent the pullback has been. A strong bar and another strong bar re-breaking the moving averages. I think we want to test the weekly moving averages. Look at XLI, which is an area that has been holding up incredibly well. It had a really strong move here with pretty good momentum conditions in place, a really mild pause, and now we're getting a little bit more aggressive selling here. So that means I'm not looking to buy a strong pullback. If we get a violent bar in an individual stock, I don't really want to play that, even if the pattern still looks okay, which these do. These aren't breaking down, but they're telling me I don't necessarily want to buy this pullback yet. All right, I want to switch this to the monthly. So we have our standard look, monthly, weekly, daily. And let's start getting into a few examples. Now, the first question I had was respect to Tesla, because last week I talked about a rally play up to towards the 18-day. And it played out really nicely. It would have been a really good trade, especially if you did the options. Now the problem is that we actually have worked through the 18-day, and that line is starting to lose a little slope. I would be less inclined to want to play this now on the short side, because the question is, thinking about playing it to the short side, I don't know. We're bouncing off a big round number. I think you'd have to be pretty nimble the way this has played out, and the fact that we got through the 18-day and it's starting to flatten out a little bit. Could you play it? You could, but I don't think you're going to see this go to another new low. Not yet. I think this wants to consolidate a little bit more before it's ready to do that. Now, contrasting that with something like Apple, which I don't like the looks of. Yeah, this got through on the daily, but look at the difference here. We haven't blown out to the downside and hit a big round number or anything. We're teeter-tottering around this really key area here. So if we get some kind of a reversal signal on the daily, and it might play out something like this where it bounces off the 18, rallies up, and then comes back down with a zero line reversal. If we get that and it comes back down through this horizontal area, this key level, then that's something I'd be a lot more interested in than the Tesla actually. Okay, let's look at a couple more symbols that came through. So I was asked about the ETFs versus stocks. Do I analyze them any differently? I do not. I analyze them the exact same way. Now, what I will say is if I know I've got a dividend play, utilities or a ETF that has a pretty good sized dividend, the way I look at support and resistance is different, especially on the support side. I tend to think there's a stronger cushion underneath when we get big drops in these indexes when there's a dividend. All right, so I'm not necessarily like a big drop like this. Might be on a tech stock or something like that. I would probably look at that a lot more negatively than I would an ETF that's paying a pretty good sized dividend. All right, let's keep going. Trane is a number of people requested this one. Now, let's look at this in the context of what's taken place. So we had a really strong move to the upside, and then we had this correction that pulled back to pretty good support, and we got a pretty good rally. Now, the selling wasn't that strong to the downside, and we got a pretty good rally to the upside, but we still have a declining 18-month. So I'm not typically, I don't expect a stock, and this happens in all time frames. If the 18 is declining, I do not expect it to keep going up without a test, some type of a turn or pause or pullback. Now look at what happened on the weekly. We went up here, we made a higher low, higher high, and then we did it again. So it's a little tired, and we're coming into this resistance zone you can see pretty good on the monthly chart. So I'm expecting some kind of a consolidation to take place. Maybe we get a zero line reversal here, and if it's not real harsh, I mean, again, I don't like the start of this, so I'm not all that interested. I'm not sitting at the edge of my seat waiting to buy this one. This was too harsh of a decline. I think it needs more time. But what we're looking for is some type of a consolidation pattern and letting this 18-month flatten out a little bit. ETN, somewhat similar, although the 18-month here is in a stronger position. The rally was a little bit better. I think there's a lot of support at the big round number around 150. But again, in the short term, it's very similar. This is too violent to want to buy this pullback here. I don't want to trade this when I see strong selling taking place. See red DI kind of kicking in again. So we're going to let this stabilize and then reemerge. And then I'm playing both the weekly and the daily together. Right now, the daily is harsh down. Okay, OTS. Now, OTIS. Now, this one had a really strong move and even carried a little bit more. Now, why is that significant to me, this move and this drive to the upside? It is overbought, but what it's done is it allows this to correct and stay above these two key moving averages, which are turning up underneath. So when I see a stock that makes a really strong move and it jets away from these moving averages, I'm thinking this has made a low. Because even if the market runs into some problems here, there's a massive amount of support down underneath here. So this is a stock I would definitely keep on my watch list, but with that said, same sort of thing happening. Some type of correction should take place, even if it's a MACD zero line reversal or something like that. It needs a little bit of time. We just crossed a declining 18-month line. So it's not likely to just take off. It should consolidate and cup around. Sticking with this same theme, do you see what's happening? You see how this is crossing? Really strong bar off the low. Really good sign that massive support underneath, right? And we paused and then we made another move. But look, we were crossing a declining line. So when I see that, I want to see some kind of a higher low to form. And it makes more sense with this. You can see all this resistance coming in. And I think this just needs to consolidate, work its way back or sideways and set this up. It really, I think, as long as it can hold the low 60 support, I think this is in really good shape. But we need improvement here if we're going to expect this to get through this resistance level. Now, the request came on this after this strong bar to the, actually, no, it came as it was starting to pull back. And now it's gotten a little too violent for me. You see this big red bar? I mean, look, I don't buy big red bars to the downside unless we're extended to the downside. Like if this has been going down, 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 down and extended below its moving average and coming into support, then I might be interested in playing a big red bar to the downside, to the upside as a buy signal. But in this case, it's sort of it's a start of a decline rather than the end of one. And I do think there's a lot of support here, but I'm just telling you, it's not. I wouldn't be in any big hurry. We just kind of upthrusted, failing at this breakout level. Okay, let's look at LW, Lamb Weston. So notice the difference. Actually, I want to go back to CAG real quick. You see this big green bar here, right? So when we break the midpoint of a big green bar, we know that's sort of significant. And we retraced almost half of it in the first week. And then we had continuation immediately. So that tells me that this strong move that we had in place is pretty much over for now, and it's got to go through some kind of a consolidation pattern. The 50% level of a big bar is important. Now, if we go back to this one, notice how we're still above the midpoint of this big bar. If we retrace back through the midpoint of that, I would be a little bit of concern that it's doing the same thing as CAG, and it probably needs to take some time here. Not necessarily looking for this to take off right now, but if it can hold this support level, I think that would be really constructive. And it can bleed back a little bit below that level, but I don't want to see it really erase a significant portion of that bar. Okay, so look at WFC. Now, some of these banks, they had pretty good move off their earnings. You see this big earnings reversal, but we have sideways. So let's look at the support here and resistance here. We don't really have anything going on in this time frame. The moving averages are sideways. If we look at this time frame, we have an 18 that's kind of rolled over, right? And we broke it and then rallied up and then failed back below. And now we're rallying back in an area of resistance, I think. There's pretty good support underneath, but I don't know if there's enough room to trade this. You would have to play this for a move just up to here right now. It's not really in a position to break out yet. What we need is for this to either break out above here or break down below here, and that would really signal our next potential to play. So we let it break out and then play the next pullback, or let it break down and play and look for the next rally. That's what I would be doing. We're in a low ADX condition. You could play you could play the breakdown or the breakout if you want. Like, in other words, if it goes here, you want to play that, that's fine. If you want to play that, that's fine. I prefer in this environment, especially based on what's going on here, I would prefer to let it break out and play the first pullback or if I'm playing to the downside, play the first rally. Let that happen first before considering it. CELH. Now, look at what's going on here. This was a pretty strong stock that actually tried to make it, well, it made a new high here, pulled back, found support at the rising 18-month, and then pushed to another new high, but then didn't have any follow through. You see how this went up but didn't follow through? And then we pulled back to the 18-week line, but momentum really didn't look all that great, wasn't as strong. And my feeling when I see this is that when we have a failure at that high, that we're losing momentum. I can see it based on the price action. So it doesn't surprise me to see this try and make a move up and then get hit pretty hard here. I think this wants to come down and test support down in the high 80s, something like that. So that's really what I'd be expecting in this. I don't expect this to do anything significant at this point. Based on what's happening just in the short term, just in the recent action, it's saying we definitely don't want to be a buyer. And if you look at the indexes, there's a potential short setup coming. If we get a rally on the hourly and reverse back down through the 18-day, that is something I'd probably consider to protect myself against a big drop in the market. We've run out of time. Well, thanks for joining me. And if you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.